The top 20 fundamental crypto terms explained. FUD, HODL, FOMO, bear, bull, whale, etc. What do some of the terms in crypto actually mean? If you've been unsure of what any of these mean, or wanted an explanation of all of these together, then this will be for you, because I'll be going through the top 20 crypto terms and explaining them for you in this video. And if you want to skip to the crypto term you're after, please check out the timestamps below in the description, or you can click on the timeline here. So, firstly, FOMO stands for fear of missing out. As the name suggests, this is when you fear you're missing out when there's a large increase in price and you don't own that crypto. So, emotion may come into play here, and you may feel the need to buy or panic buy, or in other words, FOMO in. So essentially, as to not miss out. The next term is FUD. FUD stands for fear, uncertainty, and doubt. This relates to when negative, misleading, or even false information is spread in the cryptocurrency market. So some people will just post FUD, F-U-D, if some incorrect news has been released, or say that someone is spreading FUD. The third term is HODL. So surely this is just hold spelt incorrectly. Well, yes, basically it is, because it means to hold on to an investment for a long period of time rather than selling. So being confident in an investment and ignoring when the price falls or increases as you're expecting it to grow in the long term. It can also now stand for hold on for dear life. TVL. TVL stands for total value locked. And this is the value, often in dollars, of the assets that are currently being staked in a specific protocol. So a TVL of $1 million, for example, means that crypto assets worth $1 million have been placed or staked in whichever platform or protocol you're looking at. Let's now look at the difference between the terms bull and bear. So a bull market refers to when the price of assets grows in a large way. So if you're bullish, you believe that a market will experience an upward price movement, and inversely, a bear market is when the price of assets or a market decreases in a large way. So if you're bearish, you believe that the price will decline in value from here. So bull and bear. The next term we're going to look at is altcoin. So what is an altcoin? An altcoin is a term used to refer to any cryptocurrency that is not Bitcoin. The next term is ATH, and that stands for all-time high. And this is the highest price that a cryptocurrency has been in history. Inversely, an ATL is an all-time low. Let's now look at the difference between a cold and a hot wallet. What is the difference? So a hot wallet is one which is connected to the internet, and examples of this are normally the wallets you have on your phone or possibly your computer. The main advantage of a hot wallet is that it's more convenient, and you often have quicker access to your crypto because the wallet is connected to the internet, fairly obviously. However, the risk is that there's much less security of your crypto assets given that they and your private keys are stored online. A cold wallet is the opposite, and this is where you store your private keys and your crypto somewhere not connected to the internet. So for example, a hardware wallet like a Trezor or a Ledger, for example, but could also refer to secure USB, an offline computer, or even paper wallets. And cold storage means you hold the keys, and therefore your crypto is offline, and you hold these yourself rather than a third party holding them online. And that's the big difference. We're now up to term 11 of 20, and that is DYOR. This is something that I personally advocate, and it stands for do your own research. This refers to you researching a project as much as possible before investing in it. In my opinion, I believe that educating yourself is the best thing you can do. And if you have any doubt about a project, there is no doubt, don't invest in it without researching it further. So DYOR. What is a market cap? The market cap is the total market value of a cryptocurrency and a way to show a cryptocurrency's dominance in the market. It's worked out by multiplying or timesing the price of a coin by the circulating supply, or how many coins are in circulation, and that gets you the market cap. What is the difference between adopting a long versus short position? To put these terms in as simple a way as possible, to take a long position on something is buying an asset with the expectation that it will go up in value in future. So if I expect the price of Bitcoin to rise in future, for example, I could buy more of it now at a lower price and therefore make more profit when it rises in future. And on the other hand, to short something is when a trader sells a security with the intention of buying it again later rather than selling it, because they believe that its value will fall in future. So again, if I think that, let's say a company like Amazon's stock price will fall, not that I'm saying it will, but to short it would be I will borrow some shares of that stock, I'll sell them at today's price, and then I'll buy more once the price has dropped, giving me more shares and therefore more profit in the future. That is the essential idea of shorting something. What is a stablecoin? A stablecoin is a cryptocurrency that tries to peg its market value to something else. That could be a currency like the US dollar, of which they're most common. For example, where one USDT, one USDC, one DAI, one BUSD, etc., they are worth $1. So they're pegged to the dollar. Or a cryptocurrency can be pegged to a commodity, like gold, for example, where one Pax G from Paxos is backed by 1 ounce of gold. And there's just a few examples from the cryptocurrency market in terms of what a stablecoin is. Let's now look at the difference between a token and a coin. A token refers to a cryptocurrency that doesn't have a blockchain network of its own. So the project is essentially built on another blockchain. The token may represent a company's share, it might give access to a product or a service, or perform many other functions. And a coin is a cryptocurrency built on its own blockchain network. Well, that is the difference between a token and a coin. What is a whale? A whale is someone who has a very large amount of crypto and someone with probably enough to manipulate the market in some way or other. So a whale is someone with a lot of cryptocurrency. Our penultimate term here is airdrop. So what is an airdrop? An airdrop is a marketing campaign that distributes a specific cryptocurrency or token to an audience. And finally, what is an NFT? An NFT is short for non-fungible token, and that is obviously a type of cryptocurrency that is non-fungible. This means that it's unique and it isn't interchangeable with something else. So it has its own unique data on the blockchain. There are many examples of NFTs today, but these could be, for example, a piece of art, a photo, a sports collection, membership to something, collectibles, music, video, etc. So there are many examples of it. So that ends the top 20 cryptocurrency terms explained, but I'd love to know if there are any other terms that I haven't mentioned in this video that you would like covered in future. So let me know in the comments. I hope you got something out of this video, and if you haven't already, please do like and subscribe as it really helps the channel, and have a great day.